So you have a new fund, $100 million. It's a lot larger than your other funds. So why $100 million this time?
We targeted that because it allows us to invest in companies at the same pace that we've been doing and take about half the round. The average seed round's a little over $2 million right now, the ones that we're focused on. But we want to work closely with other partners, whether it be other seed funds or angels or smaller funds. And this allows us to lead those rounds, which is important to us, but also work with partners.
We're looking at VR and AR, we're looking at conversational interfaces, we're looking at robotics, we're looking at AI broadly as a sector that cuts across those three. VR really, it's a pathway to mixed reality, is kind of how we look at it. And it's very early days, and we'll see how it shakes out. But investing in the tools layer is kind of where we're focused on in all of these areas.
What categories within IoT are you most enthusiastic about?
I think the devices are going to, again, go away. So it's going to be more gesture detection and like voice detection. And so IoT is just a manifestation of computing, kind of really just an input to augmented reality computing.
For example, if you're in a car, you want to obviously talk because you have your hands on the wheel. If you're in a crowded place, typing makes sense. And some places you might do a couple things at one time, speaking and hitting screens. So this is the way that we think these interfaces are moving.
We find that having the technical DNA on the founding team is fundamentally important to the success of technology companies. Like outsourcing that, while might seem capital efficient or might seem efficient in some ways, it doesn't generally long-term work out over time.
And there's a stat actually in CB Insights that you guys get companies from seed to A faster than anyone else, which is pretty good for your portfolio companies. How do you do that?
We feel like we're co-founders to our investments, often without the title and the equity, but it means we do everything that they want us to. And I think because of that, that really helps these companies raise and get to the next round faster.
And I think that's a product of our entrepreneurial backgrounds. We're all founders and operators of companies. There's something called a crystallization moment where we really enjoy, as a company grows, we'll see, like it's usually a 4 to 6 week period where the team really gels, they don't even have to talk to each other, they just know what's happening. You start getting product market fit, and it's a really magical time in the life of a company.
And a lot of the entrepreneurs that we work with say, well, when they work with Eniac, they really get 4 for 1. And I think a lot of other venture firms, the companies get siloed where one partner works with the company, and mostly on a business sense, not exactly on the technology as much as we do.